As far as we are aware, humans are the most intelligent animals on the planet. This is what makes us unique. Yes, we are clearly weaker and less nimble than, say, chimpanzees, but we are smarter. So what happens when something so much smarter than the smartest person appears in silicon form? It's really hard to predict what will happen in that situation. It's called the singularity. Rapidly evolving world of tech investments, particularly with Tesla. In this video, we'll examine the dynamics driving the most recent spike in Tesla's stock prices, the most recent advances in AI, before we go into the intricacies of Tesla's financial whirlwind and future prospects. Let's look at new market adventures and the major variables that could push the company's stock even higher. If you like our content, please hit the like button. Your support encourages us to continue providing you with the most insightful and current investment information. Additionally, to ensure that you never miss any updates from Tesla stock news, we're breaking down everything from Tesla's impressive stock performance to the strategic moves that could lead to even more growth. We'll also discuss how the company's innovative projects, like robot taxis and AI advancements, are shaping its financial landscape. Finally, we'll get into some expert predictions and analyses that suggest Tesla's upward trajectory is far from over. With an astounding 41% increase, Tesla's stock has been on an extraordinary upward trajectory, marking 10 days in a row of gains. This increase is due to a number of important variables. First, in order to successfully satisfy demand and guarantee that fewer cars are left unsold in inventory, Tesla has increased its car production and delivery. Possible overvaluation. Tesla stock still has strong support above $230. This implies that even in the event of a decline, the stock price may not drop below this level because people often assess companies like Tesla based on their potential for growth and future earnings, even when they are trading at high multiples of forward earnings. Because of its potential for significant growth, Tesla is regarded as a viable investment. These assessments are dependent on the general dynamics of the market and anticipated future profits growth rates. Considering the future, despite persistent worries about overvaluation, a sizable portion of analysts are still upbeat about Tesla's stock potential and think it might rise much further, perhaps hitting $300 or $400 in the near future. This optimism is supported by technical analysis methods like SVIBNI retracements, which many traders employ to forecast locations of support or resistance within a market rather than only relying on conjecture. However, there is no assurance that Tesla will reach and maintain these greater levels of growth in its stock price. The business needs to keep pushing for improvements in its financial health, especially in areas like profit margins and revenue growth. To stay ahead in the cutthroat electric vehicle and energy sectors, Tesla must effectively manage its operating costs while continuing to invest in research and development. The company's capacity to innovate and scale its production will also be critical in this regard. Due to the company's relentless innovation and ambitious expansion tactics in the electric vehicle and renewable energy areas, the market's general perception towards Tesla is still favorable. If Tesla can sustain its current pace and continue to outperform the market, investors and market watchers will be keenly watching the company's quarterly financial results, as well as any announcements regarding new models, technological breakthroughs, or market expansion. Indeed, it appears that the company and its stakeholders have a bright future. The upcoming years may be crucial for establishing Tesla as a leader in worldwide technological improvement, as well as for deciding the direction of its stock. Given its artificial intelligence skills and its involvement in the energy industry, which are key drivers of its stock surge, the market currently perceives Tesla as an undervalued asset. Both option and put purchasers are quickly closing their positions during a phenomena called a gamma squeeze, which is driving up the price of Tesla's stock. This indicates that the market recognizes Tesla's potential in artificial intelligence and its continuing story in the energy sector, which continues to draw investor interest. Nevertheless, despite the positive momentum, investors are advised to exercise caution and humility when trading. Tesla's stock It's crucial to avoid making the same mistakes as in the past, such as using excessive margin or carelessly selling calls, which can result in significant financial loss. Investors are also encouraged to maintain a long-term perspective and avoid unnecessary risks that could jeopardize their financial stability. Although interest in Tesla is high, the market has not fully stabilized, suggesting that a cautious long-term approach is more advisable for those looking to invest in Tesla. Experts advise concentrating on a 10 to 20A investment horizon. In addition, there is a noticeable imbalance between buyers and sellers at the moment, with large institutional trading volume still not reaching the levels seen in the past. Institutions are increasingly reevaluating companies based on their involvement and integration. Artificial intelligence into their operations. Concerns about how these AI initiatives impact stock movements and the recommendations for managing investment margins reflect a cautious approach to this emerging technology. But there is a growing trend where companies are actively incorporating AI models into their business strategies, which is changing how institutions view their long-term value. The need of collaborating with a trustworthy individual when making financial decisions cannot be emphasized enough. Relying exclusively on online counsel carries a substantial risk. Instead, it is advised to look for and utilize the knowledge of seasoned financial industry professionals, allows them to offer tailored, well-informed guidance that considerably lowers the chance of financial errors. Investors are confident in the long-term prospects of businesses, particularly those that successfully use cutting-edge technologies like artificial intelligence. Believing in a company's future requires not only trusting in its present financial health, personal health or market performance, but also in its leadership and execution skills. These two elements are crucial for highlighting a company's potential for long-term success over the years. And the recent spike in Tesla stock has generated a lot of debate about what's driving this outstanding performance. One major area of conjecture is how artificial intelligence will affect Tesla's expansion. Many people think that Tesla's AI discoveries are a major reason for the stock's increase, and there's also careful research on the company's future developments, especially how they might affect its earnings and prospects. Position in the market. In terms of investing strategies, experts and investors are keenly observing how these aspects will manifest themselves in relation to Tesla's stock value and financial health. The recommendation is to enter a bull market as soon as possible. Realizing the long-term potential of forward-thinking businesses like Amazon and Nvidia can result in significant profits. An important lesson can be drawn from previous investments. Selling stocks too soon based on short-term fundamentals can lead to missed chances. Instead, comprehending and acting upon these companies' long-term growth possibilities would produce better results. Many people are unaware of the extensive ramifications and sophisticated capabilities of Tesla's fully self-driving FSD technology, despite financial results showing that these technologies are still largely underestimated. Despite having the potential to drastically alter our world, as Tesla continues to develop and improve its FSD technology, we can expect to witness significant changes in the way cities are planned and constructed. For example, with fewer personal vehicles on the road due to efficient and dependable autonomous driving, urban planners may reduce the space allotted for parking lots, creating more green spaces or expanded pedestrian zones. This shift could also spur the development of smart traffic management systems. This innovation is not just about congeny. The implementation of FSD technology could significantly alter how people commute, possibly making long distances easier to handle and altering the perception of living far from work. The ripple effects will affect many facets of daily life, from cutting down on travel times and transportation expenses to enhancing safety and environmental sustainability. As these technologies develop and their uses spread, the potential for major societal changes increases, placing Tesla at the forefront of this futuristic landscape. The continuous advancements in Tesla's AI and FSD technologies promise not only to improve automotive functionality, but also to spur a broader urban and social transformation, heralding a new era in modern living and mobility. Despite reaching record earnings, the emotion behind Tesla's stock movement is rather complex. The value of Tesla stock has decreased. The market is buzzing with excitement over Tesla's new ventures like robo-taxis and the Optimus project. But predicting the success of these ventures is fraught with uncertainty due to a number of factors, including the timing of their launch, the schedule for ramping up production, the specifics of their business models, unit economics, and potential regulatory challenges. This counterintuitive movement can be largely attributed to external economic factors like rising interest rates, which affect overall affordability and investor sentiment towards the stock. That concludes our in-depth analysis of Tesla's current stock movements, future ventures, and the key voices influencing public perception. Despite these uncertainties, predictions are optimistic, pointing to a possible 55% to 50% upside in Tesla stock over the next 18 months. This suggests that Tesla remains a strong long-term investment opportunity, especially if it successfully navigates these new ventures. Despite record profits driven by outside variables like interest rates, Tesla's stock is going through a mix of highs and lows. I have some questions for you now. What are your thoughts on Tesla's new ventures like robo-taxis and Optimus? How do you think changes in interest rates will continue to affect Tesla's stock performance? Tesla is preparing for exciting new projects like robo-taxis and the Optimus robot, which, despite production and regulatory uncertainties, hold significant growth potential. If you thought this video was educational, please remember to like it and subscribe to Tesla Stock News for more talks and updates. Similar to this one, your assistance enables us to provide you with the most recent information on Tesla stock trends and insights. We appreciate your time and hope to see you at the next one.